absolutely feels different to me. From a narrative perspective, people would have historically said, well, this is when Bitcoin shines. This should have been a hedge against all of this craziness. The underlying asset is really being widely considered dead. One of Saylor's and MicroStrategy's strong suits historically has been about their transparency. What you have seen over the last few months is a deep challenge to that. It took gold decades to emerge out from under the weight of all those games that were being played. You can look at Saylor and Strategy as the beginnings of that system being put on top of Bitcoin. Many institutions, they need to see how far this goes before momentum's going to come back. And I think many do believe that Bitcoin will be a major beneficiary of any reversal of the AI trade happening. I would not be surprised if we see a little bit more rockiness in the Clarity Act and we see this bear market continue. I think we're going to go through a very uncomfortable time period. It is about changing your time preference.
The year is 2026 and the 58K gang from 5 years ago is alive and well. The last 6 months have been so brutal because it's the first Bitcoin bear market where stocks are at an all-time high while Bitcoin is in the gutter. The leverage is bigger, the pain is wider, and the knives are out inside the community. Welcome back to the Bitcoin News Channel. I'm your host, Rob Wallace. Do me a favor and share this video with one person you think could use some perspective on this bear market. My guest today has been building in Bitcoin for over a decade. Will Reeves, CEO of Fold. We get into why this bear market feels different, whether the 4-year cycle is truly undefeated, and if the bottom is actually in. We go straight at digital credit, with the preferreds down over 25% and the way that they were marketed that got a lot of people burned. Then how Fold sells Bitcoin without an apology to grow its business, why payments are the real signal, and the life that Bitcoin is actually supposed to unlock. And just before we start, I'm not going to ask you to subscribe, but if you find this video useful, be sure to share it with one person you think could benefit from it. Let's get into it. Hello, Mr. Will Reeves, CEO of Fold. How are you doing today?
I'm doing great, Rob. Despite the turbulence in the markets, all things are good here at Fold.
Yeah, it's pretty crazy. We are in 2026 and the 58K gang is alive and well. Pretty insane. But you've been in Bitcoin for well over a decade now. This is not your first bear market, but this is the first one really where stocks, other assets are up in sky high valuations and Bitcoin is down in the gutter. Does this one feel different to you?
It absolutely feels different to me. The signs are all the same, except there's more leverage, there are more players, and it feels bigger and it feels more brutal because more of the world is experiencing the bear market that was once, confined to a group of enthusiasts in the corner where everyone could laugh at. Now has, reached out beyond, like you said, it's touching into the equity markets. It is now in boomer ETF portfolios. It's everywhere. And it's not just in the Bitcoin market. This one's interesting too, because the volatility can be seen everywhere except maybe 4 or 5 public equities that are in AI. And so it is a particular volatile moment. And I think it is one that, from a narrative perspective, people would have historically said, well, this is when Bitcoin shines. We are in a deeply, we have a war going on that is on again, off again, on again, off again. And I think it's interesting to talk about, maybe why it is performing the way it is, versus, narratives that would have established that this should have been a hedge against all of this craziness.
Absolutely. And what's funny is that we thought with the coming on of institutions into the market, the 4-year cycle might finally be over, right? The halvings are having less of an impact. We have these big diamond-handed institutions in the game now. But when you look at it, we are playing out exactly to the 4-year cycle. So do you prescribe to that model?
I mean, it does look pretty undefeated now, regardless of how many times we want to declare that cycle dead, and we've broken free from that. I think this is a little bit different in the amount of external factors and volatility and uncertainty happening outside of Bitcoin could be a coincidence here, but it certainly is following the 4-year cycle. And so, I am not 100, I can't write it off. I would say there are just many more factors now that happen to be coinciding with this 4-year cycle that could either be amplifying it or, or making it seem like it's still here.
And I'm not going to pin you to force you to make a number call, but does this feel like a general bottom place to you around the high 50s, low 60s?
High 50s, low 60s. I think, I thought if you would have asked me a couple months ago, I thought the bottom would be around 58 or so. Seeing how we're, holding up here at 60, but still no major breakouts or bids. And in fact, just, I'm not sure what the, I think if people would look to catalysts in the market that would be positive, many would have pointed to, the Iran war coming to a close. That seems to change on a daily basis. Or we'd also look at the Clarity Act. That also has been pushed out. I think the last time it was July 4th. Now it's talking about July 17th. It's increasingly become a political lightning rod for opponents of the administration to make life harder for something I think is probably very important for the administration, not just from, I think, what they want to do with the industry, but their own personal bags. And then, AI, Micron just was posted incredible earnings, I believe yesterday or the day before, showing that, hey, we're not, this bubble is continuing to churn out productivity, which could mean that we have another leg. We could be in the low 50s, I think is definitely a possibility. But my long-term bet when we came into this was 58.
Well, we're there right now.
Yeah.
And you mentioned catalysts and you say Clarity Act could be one. You are the CEO of a public company, a Bitcoin company. But a lot of this has to do with stablecoins, right? Are there any benefits for you as the CEO of Fold when it comes to the Clarity Act?
The Clarity Act, I think that the general benefits that would come to Fold are less because we're a stablecoin company, because we're not. But the benefits come to it from a rubber stamping on the industry, a perceived rubber stamping or acceptance of our industry, which may come in the form of institutional adoption of stablecoins, and maybe Bitcoin is just a piece of this. You see, let's see, Charles Schwab listing Bitcoin trading. You will see that accelerate after Clarity, and it will be more of, I think, a soft benefit to us in terms of, every partner outside of the financial industry that we rely on and want to, have designs to partner with and find distribution with. They look to things like that as very important. And so I think the benefits are softer to Fold, but I think they're stronger to our industry, because ultimately I think a lot of this is about bringing stablecoins into the system. It's about transitioning out of the Eurodollar system into a stablecoin system. And the truth about stablecoins is they are much closer to Bitcoin than, holding a Eurodollar or a traditional dollar ledger in the older traditional system. So I think it does bring more liquidity closer to Bitcoin, which has another kind of softer benefit to this more generally. But, specifically, no. And frankly, with where Bitcoin is at, if you look at where Bitcoin is at today in a bear market, we've had multiple times where the institutions were quote unquote coming. And the most sure thing that scared all of them away was a good old fashioned bear market. And then they put off their plans for another 3 to 4 years. I would not be surprised if we see a little bit more rockiness in the Clarity Act and we see this bear market continue, which I believe it will. You might get some of these major institutions starting to kind of back off or shelve their plans for some of this adoption, which, ultimately for me, selfishly, I think is a great thing. That gives us more room without major competition coming into the picture, which has always been, one of the arbitrage plays that Fold has been able to play, is that the traditionals just don't come in. They don't feel like they can touch it, and a good bear market definitely will scare them away.
Speaking of stablecoins, you guys are a Bitcoin only app. Of course, you do TradFi finance along with Bitcoin next to it. But we just saw Cash App integrate stablecoins as well, right? So is that alluring to you in your business?
I think stablecoins is one of those things that's it's interesting from the standpoint of you look at the outside narrative and people say stablecoins makes everything better for people touching fiat. When we've looked at it and when we've looked at what value they can bring, certainly giving people dollar accounts internationally is a major thing. And I think is maybe the primary thing, both whether you're a business or an individual outside of the US jurisdiction and banking system. Undoubtedly, that's where we saw the product market fit happen with Tether outside. That's where we see all of these stablecoin cards. If you're looking at the stablecoin cards, Red Dot, Rain cards, their primary audience and where all of the bulk of their growth is happening is outside of the US. So it is both a stablecoin account where they can hold dollars, but the stablecoin cards allow for payment. And I think that's a great use case for it. And I think undoubtedly has achieved product market fit. I think when we think about stablecoins in the US, it's a very different system. Primarily here today, those using stablecoins here in the US are ones that are already in the crypto system, essentially a lot of them traders who are coming in and out of, trading long tail crypto assets, pulling into stablecoin, going into other assets, trading out. But generally, people have an okay time accessing US dollars here and without an issue. So I think Cash App's play with integrating stablecoins is an incremental benefit, giving another cohort of their customers an ability to fund their account in a different way. The interesting thing is when you fund your account at Cash App with stablecoins, it actually just gets converted to more traditional fiat in your checking account. So they are, even with their implementation, they're saying very clearly this is an incremental new way to fund your account. That's about it. I do think that Cash App, this could be the beginning of their international expansion play, where stablecoins would play a more important role. So for us, I think we'd look at it very similarly. I think we have designs to add it as a funding source. I think that's going to make a few of our customers' lives happier, easier. But ultimately, when we look at stablecoins, it's providing dollar accounts for customer base outside the US, which we currently don't operate in. But if we were to, that's certainly the strategy we would go with.
And we just saw a law get passed in Congress that said that a CBDC is not allowed in America until at least 2030, right? But many Bitcoiners draw parallels between stablecoins and CBDCs. It's very easy to see where these transactions are going and also shut them off. Do you see any parallels there?
Well, what we are seeing with the stablecoins in the US today are effectively the American way of producing a CBDC. In the American system, unlike the European system, which they have all kind of openly said they're going to create an official CBDC. It's very European. It's very much centralized, regulated from a government body. You can see that whether that's in the healthcare systems or, that's kind of the way that their system works. And that's how they deal with a lot of, power dynamics there. In the US, it's never been that way. It's always been private sector with control over that private sector. And effectively today, the US being such an important market for either stablecoins to be friendly with so that they can conduct their business abroad, or to be able to conduct their business in the US, effectively have to submit to whatever controls the US government applies to them, whether that is the ability to freeze, monitor. It's all already there. These are all effective CBDCs. I don't think we'll ever see, the US has any reason to create a CBDC. I think it would be, fundamentally, and it would literally be anti-American, but at the same time, we have effective CBDCs through the private market here. And that's been pretty much the American industrial way. And, you know, the reason we can get away with that is the economic and political military power that the US, actually controls. The reason why the Europeans can't do the same thing is, well, for the very same reason we don't operate in the UK, for instance. It's simply not a big enough, important enough market for us to go and submit to all of that, all of the overhead of operating there. Whereas in the US, if you want to have any ability to scale across the world, you're going to be within the dominion of the US. And so you're going to see, I think, everything it's going to have everything the CBDC has without the name.
There you have it. Yes, America is the center of financial innovation, and we are the birthplace of course, Bitcoin treasury companies. And they were the story of last year. Paper Bitcoin summer, as some were calling it. They were you couldn't get around Bitcoin without hearing about another Bitcoin treasury company popping up. Well, it's been quite a different story. 1 year later, we have seen many of these stocks take a beating, and many of these business models come up into question. So I know that you were there at the Bitcoin conference last year, you were there this year, and just the difference in the talk of the Bitcoin treasury industry. Give your perspective as the head of a public company.
I think for us, a lot of this has been about, if you look at we've kind of sped run integration of Bitcoin into the system, and ETFs came in many ways. You also saw the rise of MicroStrategy move from a novelty that's been operating through maybe one bear market to one that has fully gone through a bear market, saw another bull run, is now deep in the depths of another bear market, and you saw a lot of things get thrown at the board and a lot of opportunism come to this space. A lot of this was trading on hype and momentum. And I think really what a healthy thing has come over the space. It's really, like all bear markets do, it pulls back the water. You see who was, on steady ground or not. And the reality is our entire space is getting smoked out in the markets right now, with Bitcoin being down 50%. It doesn't matter if you're a Coinbase with an operating business, or a Robinhood, or a MicroStrategy that's running their own version of their preferreds and digital credit, or you're just a shell that tries to bundle up as much Bitcoin as possible under them. Everybody is getting hit by the fact that the underlying asset is really being widely considered dead. If you look at the media today, as it's done many times in the past. But what we are seeing is all the treasury companies. Really, there's only been two that have really, I think, doubled down in a way that have continued to use financial engineering to increase their Bitcoin supply, even in the bear market. That would be Strive and a MicroStrategy. They are way out on the curve of launching these preferreds. After we went from convertibles to preferreds, a lot of that is trying to find product market fit, and I think many would say they found it with these preferreds until the last couple weeks of hey, where was this? Where does the marketing of, hey, this is an alternative to a money market fund, match with, hey, what these things actually are, where the principal is absolutely at risk. And the differences are very real. And so I think we're going to go through a very uncomfortable time period, which the bear markets always do. Anytime you have a business model that relies on Bitcoin going up, it's gonna put you through a lot of pain. And we're going to see restructuring on how these preferreds are marketed. We're going to see, as the market continues, like, it's going to be very interesting to see the preferreds, if they come back up to par. If they don't, I think I could see both scenarios, and both will get a new narrative. Whether it is the preferreds not coming up to par, it will be an opportunity for strategy or these others to to actually use it as a an opportunity where they essentially got people in at 100 that can buy back at 80, and it would be a boon to the equity for them to do that. Now, what does that do to the trust of the instrument? I don't think it's a very great thing, but if you look at a lot of the retail that went into this, a lot of them are chasing yield, and also a lot of them are aligned with Bitcoin. And so if they have an idea that Bitcoin has overall in the long term will continue to see upside, they will still collect their yield on a daily basis. And if they have a long enough time horizon on the preferreds they went into, it's arguable that going down to 80 right now is that big of a problem. Like if they believe that it will come back up to 100, I can see how that's a rational bet in their head. But for us, we're an operating company, and so we look as our treasury to support, empower, and be opportunistic for the operating company itself. And so we always look at it as how much runway does the business need? What are the investments are we making in the business coming up? And what is Bitcoin doing at any given point? And so for us, when we saw the shakiness in the market, we opted to restructure our treasury so that we could guarantee our ability to invest in the operating company at the level we wanted, because ultimately we believe the operating company is where the multiples are going to come to our business. It's continuing to be able to ship and execute. And that means selling Bitcoin. And it's exactly like, many of our customers alone live on Bitcoin. And you'll see in bull and bear markets, they're optimizing their own treasuries to, hey, I'm going to have my son is getting married next year. I got to make sure I have enough, capital to be able to support that. Or, hey, we as a family, we want to buy a home or pay off our home coming up. Bitcoin is bought and sold for a lot of other reasons besides long-term HODL forever. And we look at it very much the same way. We look at our Bitcoin as the ability to unlock opportunity and value for the operating company. And so we look at where Bitcoin is every day, but we have very structured ways of understanding how much of our exposure at what times in the business cycle we want to be in. And so you'll see us make changes like we did a few weeks ago, back up in the 70s. And now, we're touching down in the 50s. And so for us, that preserves a ton of shareholder value. It allows us to continue to operate, without distraction or without being at the burden of the treasury.
How many apps does it take to manage your Bitcoin? One to buy, one to send, one for Lightning, and another for loans. That's a lot of friction. Well, now there's Rhino. Listen to the end, and I'll tell you how they'll set you up with $10 of free Bitcoin. Rhino is a next-generation Bitcoin app that makes living on Bitcoin easy. At Rhino, you can buy Bitcoin with zero fees. Get a Bitcoin-backed loan right in the app. Move cash globally over Bitcoin rails fast and easy. Automate your stacking with a DCA plan, so your stack is growing, whether the market is up, down, or you're touching grass. And it doesn't stop there. Bill pay, debit and credit cards, as well as retirement accounts are all coming soon. At Rhino, your Bitcoin is never rehypothecated. Security comes first with biometric verification, 24/7 fraud protection, and the ability to move your Bitcoin to self-custody whenever you're ready. Click the link below in the description and download Rhino for iOS or Android. Use code Bitcoin News and Rhino will drop you $10 of free Bitcoin right into your wallet to start you on your stacking journey. Get the most Bitcoin for your dollar with Rhino. And I think the fact that you guys are so communicative and open with the market as to your plans, and the fact that this is not something where you're counting every single sat and trying to accumulate this massive hoard of Bitcoin. This is working capital so you guys can improve the business and continue to grow. And so we're going to dive more into Fold and how you guys are using your treasury, converting it, and building your business. But first, I want to get back to the communication aspect when it comes to these prefs, right? They were sold as a money market fund like product. A savings account is how they were marketed. You care deeply about personal finance and the average American and how they're trying to get ahead. What did you think about the marketing of these preferreds, especially now that they're down 25%?
A lot of thoughts. Our actual vision and reason for being at Fold is to build the savings of Americans to support their kind of long-term goals, dreams, and opportunities. And so anytime a new savings product comes to market, we're naturally very, very interested. And the fact that they were very directly marketed as such, it was something that came up on our radar very, very quickly. Backed by Bitcoin, kind of interesting concept here, and the marketing absolutely worked. If you look at who's buying, there was a delta between what the marketing message was and what was being said on CNBC on who will buy these preferreds. And a lot of the marketing was, hey, this is going to come from fixed income institutional investors who are looking for higher yield, who are stranded in bonds, and they're going to naturally choose these types of preferreds because they offer better yield. And those institutions are very risk averse. So they're going to love these. Now, when you look at actually who holds these preferreds, it's 80+% retail, showing no signs of stopping. And I think that is where you start to get into some misalignment in the messages and where transparency really matters for this. And I think one of Saylor's and MicroStrategy's strong suits historically has been about their transparency. And I think what you have seen over the last few months is a deep challenge to that. I'm never going to sell Bitcoin, sold Bitcoin. These preferreds are going to change the institutional bond and fixed income market. It's all being bought by retail. And being done through kind of AI generated marketing tools that are out there. So for us, we know that a very significant portion of our customers engage with these preferreds, Bitcoiners who have come in and said, "Hey, we know that Bitcoin is volatile. I will take a product that gives me dividends through bear markets, and that's going to be a good balance." And so we do see a lot of customers kind of trapped in this. Now, many do take the standpoint of, "Hey, I have a long-term view on Bitcoin. Bitcoin's going to recover. These preferreds are going to recover. And in the meantime, I'm going to earn these dividends." And I think there's a lot of truth to that. I think that when you think about, retirees, even in the traditional market, they don't go look at their principal balance every single day. What matters to them is that dividend check is coming in every month so they can, pay their house or, put groceries on the table. So, I think right now we're going to see there has to be a realignment or reassessing of how the marketing message is actually meeting reality. And that will both be that, number one, this product is very much a product geared towards retail seeking yield. A lot of it is taking away from all of the DeFi yield seeking community. This is why you see in DeFi, a lot of these ecosystems are now ghost towns. And a lot of the reason is just because these preferreds have become a far better, in some cases, potentially safer way to chase yield than it has been in these crypto ecosystems. To some extent, a lot of them will take their leverage they can go find in DeFi and then bring it and buy Stretch with it, or some of these other preferreds. So the whole ecosystem is changing in a very big way, and I think the only way that we're going to get out of this, that we restore trust, is to realign these messages to what they are, that be properly aware of the risk, and to some extent that doesn't even mean that the providers of these instruments need to be more transparent. The market has shown the risk that is here, and that memory is not going to go away. And so now it is going to be about how retail continues. And my bet is that a large segment of the population interested in these are just looking for yield and are okay taking principal risk. So I think they're going to be fine with a very core cohort. Does this start to bleed into money managers recommending these products to their retirees with their other accounts? I think this is going to put a major damper on that for quite a while.
And that leads me to my next question is, you were just in New York, you're having meetings, you're the CEO of a public company. there's institutions that are now looking at this industry and they're seeing the last year of the Treasury companies and these preferreds. Now that's brutal last 2 weeks in the preferred markets. What is the institutional look on Bitcoin right now from the Wall Street perspective?
I mean, one of the things you learn about the institutional side of things is demand and attention comes from either being structurally important for the continuance of the economy. So things like energy, commodities, you will always get a bid there. There's always the macro landscape is always changing enough where, you could play across this portfolio. But at the same time, the majority of the space is run by momentum. That's true of retail, and that's true of Wall Street as well. And so just like retail, most of the attention is now on AI plays and seeing how far that bubble will continue to expand. So, Bitcoin right now, largely across the way, the sentiment around it on almost every single plane is down very bad. Is the wet dog of the assets. And so there are still believers, but right now to many, this is the first time Bitcoin has hit a bear market when it has been already adopted to a large extent by many institutions. So many are just in a wait and see. They already made the commitment into the space, but they need to see how far this goes. And before before momentum's going to come back. And I think many do believe that Bitcoin will be a major beneficiary of any reversal of the AI trade happening. But when that happens is totally remains to be seen.
And many people on X, analysts, especially outside of Bitcoin, are saying that Saylor is sort of an overhang in the market right now, that at 850,000 Bitcoin, it's just too much of a concentration risk. Do you think that Strategy has, quote unquote, too much Bitcoin?
I think there's absolutely what Saylor and Strategy represent over and what has happened over the last, there's no CEO of Bitcoin. There's no marketing. As of this point, the majority of the kind of world of Wall Street or even retail that doesn't come from Bitcoin in this space for a while look to Saylor as that symbol. And that is, I think, a lot of why you're getting a lot of the messages and the aggression and the sentiment out there against Saylor is because people need to point at something. And whether it's true or not, he's going with that concentration. That's what's going to happen. So there is risk from that. Now, is there risk from him purely holding 800,000 Bitcoin? I think absolutely. If any implosion happens with that, there's absolutely going to be a change in the market. If Strategy comes out of this and starts to say, really the most measured and balanced way to do this is to have a programmatic or aggressive way, not just tapping dilution of MicroStrategy, but selling large tranches of their Bitcoin holdings. That will absolutely put a damper on the entire market. No one wants to, just like anything, no one wants to be buying into an asset where they know a major player is going to provide sell walls into you. And so I think that's unavoidable. And how his influence continues, I think, is going to be seen of how he emerges from this. So I think it's an undeniable risk from the standpoint of Bitcoin largely is seen now to have a CEO or CMO for the asset that just has never been true before. It's also where does Strategy come out on the other side of this with how they're going to navigate this? And there could be a structural bearishness that does come out of this that would take a while for Bitcoin to recover from. You look a lot at what happened with gold entering the system and the derivatives markets that came around it. It took gold decades to emerge out from under the weight of all those games that were being played from it. And so, you can look at Saylor and Strategy as the beginnings of that system being put on top of Bitcoin that will absorb and maybe dampen a lot of the volatility that, is lauded as being one of the, volatility is vitality. That is what they say themselves. And so that could easily come in and dampen a lot of, take the tops off, the blow off the tops. Maybe that's why we never had a blow off the top to begin with in this last run. But it also may be the reason why we're saved from hitting down into the 40s, which many are calling for.
So let's bring it back to Fold and your treasury. You guys stacked a bunch of Bitcoin last year. And then, as you said, you sold some because you have business initiatives that need funding, such as the credit card. So tell us how you as a CEO view Bitcoin on your balance sheet, when to sell, when to buy, and when to fund parts of your business.
So before the idea of a digital asset treasury or even a Bitcoin treasury company, Fold, like many others in our space from the beginning, would have Bitcoin be an important piece of that treasury. So whether it was we took in new funding from investors, we always apportioned a large piece into Bitcoin. Well, why would we do that? Number one, we are here to support and are believers in the growth of Bitcoin long term. We are here to support our customers essentially doing the same thing. And that strategy has largely been very successful for us. In our early days, holding a treasury during bear markets allowed us to tap into resources that otherwise wouldn't have been there. When Bitcoin has gone into bear markets before, it's been institutionally adopted, before it was in the public markets, you would have private funds and venture capital would completely leave the space. And so you would count on having 3 years where going out and trying to raise money was just not an option at all. And for many Bitcoin companies, allocating into Bitcoin, seeing it through a cycle and being able to tap that essentially was the strategy of how you would access new capital to continue to expand your business in the most important time, which is the bear market. So for us, this has been really par for the course. This is how we've always operated. And it is largely the reason why Fold has survived during the worst, deepest bears in the past, but also why we've been able to continue to build through bear markets, which is the most important thing for a Bitcoin company to be able to do. We look at this bear market very, very, very similarly. I think, honestly, when we were back in October 10th was largely a black swan event for us. I think we were expecting there continued to be more of a run. And when that didn't materialize, we had to really change how we thought about our treasury, looking at, hey, very seriously, how are we seeing the beginnings of a bear market take form? And so we took a few actions along that course, never doing everything all at once, but as we saw the market shift, looked at our own roadmap, looked at all the investments we wanted to make in our future, we have very hard and fast kind of guidelines for ourselves of here's how much we want to be able to invest in the future. And when the treasury starts to hit certain levels, we have to rethink where we're at. And so that has both allowed us to be very nimble and I think make moves at opportune times. The lucky thing with Fold is, largely all of the Bitcoin that we have that we sold during this time was all in profit from when our original cost basis. And so that factors into it as well. And ultimately it's just about how are we, my job is to be the best capital allocator to deliver results for our shareholders. And so a lot of it was, when is the best time to make this move? How are we going to preserve the value and the profit that we've already realized on it? And how do we then fund that into the business that, we believe is going to have, provide more multiples on the company than, Bitcoin could ever do itself, just sitting on our balance sheet. And we were very proud to take these because I think it allowed us to show in a very serious way, we're not here to be a Bitcoin treasury company. And, doing something like we did was very clear sign to the market is we take our operating company very seriously, and we have a lot of big designs and things coming that we wanted to invest in. That's our priority. And that was an important signal for us to give to the market.
And one of those big initiatives is, of course, the credit card. It's been years in the making. You guys are one of the pioneers of Bitcoin rewards, of course, and this takes it to an entirely new level. Tell us about the credit card initiative, what makes it different, and why should everybody sign up?
Yeah, this is, Fold back in 2019, we were, created the idea or the category of Bitcoin rewards as an alternative to cashback and miles. That was really the core product that we offered. That space has since grown tremendously. It has become one of the most reliable ways to get people into Bitcoin or to let people deepen their relationship with Bitcoin. So you don't need to put your 401k into Bitcoin. You don't need to smash buy Bitcoin when you think it's you're buying the dip. You can be earning it very passively, conservatively every day in meaningful amounts on the spending that you've done. And our customers have been transformed by that. And we started with our debit card product, and we have now begun rolling out our credit card, which allows you to have an unsecured line of credit, up to $20,000 today, and be earning up to 4% back in Bitcoin on all your purchases. And so what this does is expand our ability to serve customers who are not just using a debit card, but credit cards, which is really the primary audience of people who are buying Bitcoin today are credit card users. And so for us, this was a really important product to bring to market. And I believe over the next 5 years, Bitcoin rewards is going to overtake airline miles as the preferred reward for U.S. consumers, and that will both be a very cultural shift because today airline miles are such a deeply held cultural. It's amazing everyone talking about the lounge they're in, how many miles they're at, and really they're all talking about it the same way. A kid would talk about going to the game room to earn points after playing video games, that then they go get prizes at the counter, and the counter is taking a 50% haircut on all of it. It's amazing to see grown adults flexing on their miles that they've earned when the whole system is rigged against them. And I think Bitcoin ultimately, with the core transparency it offers, the results it's already given our customers. Some customers have bought homes with their Bitcoin rewards that they have earned, makes it superior. And in times like this, our existing customers are using the cards more than ever because Bitcoin is down. That means effectively you can earn twice the amount of Bitcoin you did than when we were back in October. The other side of it is that, in a time when Bitcoin is down, you have a lot of investors on the sideline who might be curious about Bitcoin. The card is an excellent way to say, hey, maybe I'm not ready to go all in my Bitcoin trade yet, but let's start earning these rewards. And that is a very compelling value proposition to them. And so it's a great product to get people into Bitcoin, deepen their relationship. And what we ultimately brought to market is very simple product, one that everyone already has in their pocket. You're just switching it out for something much better. And, we are looking forward to this summer, a new product expansion, both for the credit card and our other products, that I think is going to make this card not just the best Bitcoin credit card in the Bitcoin space, but the best credit card in the traditional ecosystem too. So going against the largest players, Chase, Amex, and we'll be unveiling that in later this summer.
Nice. Love to hear it. I've heard you talk about airline miles as the ultimate shitcoin, right? The fact that you guys have been able to provide $70 million worth of Bitcoin rewards to your customers. And if that had been provided in airline miles, it would be worth less than 10 million, right? So talk to us about that economy when it comes to rewards and credit cards and how you got Bitcoin in there.
So the competition, so airline miles is potentially the largest. So airline miles is a very interesting industry. So if you look at all of the airlines, United, American, Delta, and you removed the airline mile revenues from their P&L, all of them would be out of business. They would be nationalized by the U.S. government. And they would have no business model. They would be operating at a deep loss to the tune of billions of dollars. When you add airline revenues into back into it, some become break even. Some, like Delta, have a nice profit. The Delta Amex cashback or airline mile card processes 1% of U.S. GDP on that credit card every year. That one credit card, and all of that economic activity is in service of earning these airline miles. And so what happens is banks and airlines partner up. Airlines sell miles to banks at a steep discount. And why do they do that? It's because they get to recognize revenue right away, and they can deal with the conversion of that down the path. But they can sell them at a deep discount because they know ultimately a large portion of those airline miles earned will never be used for anything. And when they are used, they control how they are used. So, there is a conversion applied to an airline seat, or buying some product with it, or upgrading, or accessing a lounge. All of these is taking more and more and more margin. So much so that the customer ultimately is going to be receiving cents on the dollar of the perceived value of these miles. And with the expansion of that, these programs hold hundreds of billions trapped in these programs overall. And most of them will never go. So on the airlines, you see massive liabilities, but you also see the revenues that are coming in from this. And so for Fold, we really looked at this system and said, this is an effect of, this is like hyper fiat. This is a money printer that has been created by a partnership between banks who can't just print dollars, but now they can print something even more that they have even more control over. And ultimately you see that printing results in about an inflation rate of about 15 to 20% on airline miles per year. So now they don't get the inflation rate of, fiat of whatever that is. Now they get an inflation rate that's much higher, that they have much more ability to do. And it has become so acute that the airlines came under massive investigation because from the Department of Transportation, and the argument was Americans now are using airline miles as essentially another savings account that they have, which is great. That's what we believe. Rewards should build savings. But Americans are doing that because they have no excess dollars to, give their family vacation. So they use the airlines essentially as a savings account to build towards that goal. And as they're building towards that goal, they are inflating and creating more barriers to the conversion of those airline miles that essentially are eroding those savings that those Americans are doing. So they all came under massive investigation for this, of essentially creating an unfair environment for Americans that now 90% of Americans are operating in these loyalty programs. So it's a reflection of how deeply difficult the economy is today, that Americans are actually relying on a funny money point system as a core piece of their savings. But also it is gotten so acute that the government has essentially stepped in to make a change. So we look at this and saying, well, as a Bitcoiner, the fiat system is very, very difficult itself and creates these strange incentives. But if you look at airline miles or these other forms of loyalty points, it's hyper fiat. And if we can bring Bitcoin to this environment that is transparent, cannot be devalued, actually build savings, have a track record of doing so, we have an unfair advantage here. At a certain point, the transparency, the trust in these programs are eroding. What we see across the board, trust in financial systems are eroding, trust in, pretty much all institutions today are at an all-time low in terms of how people trust. And so one of the major competitive advantages that Bitcoin can bring, besides number go up, is trust to these systems, where you can plainly show how it operates here and how you are structurally unable to do that with your system. And that provides a value proposition of trust that just doesn't exist in the in the competition. And so bringing Bitcoin was not just an interesting way of giving people an easier way to access Bitcoin. It was actually an arbitrage against broken systems that are largely done when people have the ability to inflate and devalue at will, which is something that in a time when people are increasingly on the edge of holding on to their value and figuring out how to do so becomes hyper important. And so for us, it is both many of our customers have more money in their Bitcoin rewards accounts than their savings accounts. It's also as much of you can trust this system more than you can trust the alternative here. And Bitcoin, has created that.
Man, that is such an mind-blowing story. Like, you guys need a whole entire campaign just based on that airline miles are a scam. Just lead with that, because I don't think anybody really knows how much they're getting stolen from by trying to rack up all these miles over the years. That's really so crazy. But you also mentioned how rewards are the most perfect product for this K-shaped economy that we find ourselves in, right? Both the luxury end and the lower class who are trying to get by can really value these rewards. Talk about that.
So one of the things that we've seen, just we could talk about Bitcoin being a hedge against inflation, but it's interesting when you're running a company, when you get to actually see how people are using these things. And when you see K-shaped economy, you have these two extremes on both sides, and the middle is kind of getting bottomed out. Now, the side of the curve that is struggling, has less to spend, but is spending a lot, is spending the majority of what comes in immediately is going out. A lot of that is because of where inflation is at and where earnings are at. The fact that inflation continues to outpace the earning power of people, and earning Bitcoin rewards. The interesting thing is, you go look at our data, and many of the purchases done 3 years ago, 4 years ago, 5 years ago on our platform are now effectively at a 50% discount or 100% discount in many cases, where the value of the rewards is worth more than the original purchase price. And when you think about that, that not only evaporates the effect of inflation, but it also retroactively builds purchasing power in a way that just doesn't exist anywhere else, because people are earning an asset that has upside, but and more than anything is not being incessantly eroded by inflationary powers. And so on one side, it builds purchasing power to the community of people that needs that the most. And on the other side of the curve, they understand more than anyone the reason why they're on the higher end of the K-shaped curve is because they own assets. And one of the things that people are converging on is that you need to hold assets. And so every piece of your, whether it is savings, is going directly into the stock market, is going directly into hard assets, is going directly into Bitcoin. Everything of the benefit of their spending should also go into assets. So it becomes part of, where they look to the choices they make as a consumer becomes very obvious. The idea of the ruse of airline mile is much harder for them to get lost in. Where the airline miles were king was that middle, was that thick middle where people, that is now being evacuated. Both they were a little bit less affected by inflation. They were also at the same time not earning enough to be moving into hard assets or had the understanding to. So it really speaks to both of the curves that are essentially driving the economy today. And it helps them in very different ways, either at one point increasing purchasing power, on the other side building savings in hard assets. Because what we see is a lot of the rewards on one side actually just get spent. They'll go in and they will put more groceries on the table, or they will help pay a bill when it was needed most. On the other side, it's being saved, it's going to cold storage, and it's just in line with their view on what their financial activity should create. And it should create exposure to assets that continue to appreciate, because holding fiat, holding airline miles is that melting ice cube, and that's what they're trying to escape. And so it's very interesting as one solution can speak so directly to both sides of the K curve. And it's why, Fold today, you can see it in our products. We have a debit card, which, there's no credit score that's required. Anybody can use it. That's been very popular. It's the highest rewarding debit card in the market today. That speaks to one side of the curve, and you have the other side with the credit card that we just released that speaks to the other side that does have credit worthiness. And Fold is trying to speak to both, because Bitcoin is a solution for them both.
And when we're talking about credit cards and debit cards, it's all about payments. And one of the biggest stories, I think you agree, of the last year is the transformation of Bitcoin payments in America when it comes to the Square terminals, as well as Stake and Shake integrating Bitcoin. And you work closely with Stake and Shake. Tell us about that relationship between the two companies.
There was a time when I believe it was, Zappos or Microsoft years and years ago announced we are accepting Bitcoin. And Bitcoin alone would jump 10% on that news. It was such a nascent time for the market where something like that could actually move the market. Almost inevitably, a year, 2 years later, they would quietly remove their Bitcoin payments systems. And the reason was twofold. Number one, the amount of people looking to spend their Bitcoin was so minimal, but also there was complexity and operational overhead of managing this other system on the side that was breaking. It wasn't great. And so inevitably they were canned. And I think it is such an incredible, I think some of the best stories in Bitcoin, largely, we're talking about Saylor and we're talking about this thing, but truly the best stories about Bitcoin, I think, are coming out of the Cash App terminals and Stake and Shake, because it is a reflection of the moving beyond that kind of time that we were in, where the technology wasn't good enough and there wasn't enough people wanting to spend. What we are seeing now is that reversal, is that not only is there enough demand that will have these rollouts not only started, because Cash App's terminals started in very small incremental ways. At first the merchant had to elect to accept Bitcoin. They have now made the decision that the customer accepts whether they want to pay in Bitcoin, and in the back end they'll settle in dollars with the merchant. So what they've shown is that there is demand now. There's enough people holding Bitcoin and using it that makes a real difference. Steak and Shake's in-store sales were the highest of almost any fast food chain in the country, going from one of the oldest but one of the least well-known chains to now completely reversing the fate of their company, so much so that they've embraced Bitcoin in all of these different ways, whether it's, they work with us to give bonuses to their hourly workers, 21 cents every hour the hourly workers get in Bitcoin, or to give essentially a happy meal to people coming to buy their burgers, where you buy their burger and then you'll get Bitcoin as well as a prize. Fold Fold has powers that for both of them, but they've really embraced it, not necessarily from a number go up standpoint, but just from this is helping our business in these core ways, whether it's tapping into a new community of people that is a great new customer base, or it is, better margins, faster payments, a better ability to recruit and retain employees. Bitcoin has this interesting tool to incrementally improve your business versus the full number go up. And you can see that if you go on Steak and Shake's Twitter today, or X today, they're not shying away because Bitcoin is in a bear market. In fact, they are out there being louder than ever saying Bitcoin payments have fundamentally changed our business. Faster payments, lower or higher margin for us. Cash App has done the same a lot with their merchants. And I think it is probably the most true, real progress that we've seen in Bitcoin today that is largely overshadowed by all the Bitcoin treasuries and all the other stuff going on. It's probably the best and brightest thing that we've seen, this integration deeply into everyday life that is being supported by real life demand for that. It is not an artificial, let's push Bitcoin on everyone and see how it works. We already went through that phase. We are now at a phase where Bitcoin is broken out. And so I think those stories where if you want to, get away from the poor sentiment on in our space, that's where you really want to look at the signal.
100%. And one thing I really value about you is you have a very healthy relationship with Bitcoin in the sense that you don't care about the total number of Bitcoins that your company holds. It's what Bitcoin enables for you and your life. So talk about that mental relationship you've had with Bitcoin over the years and give some solace to the people that are dealing with this brutal bear market right now.
I think the HODL meme it has obviously been one of the most powerful memes out there. And I think why it is powerful is not the idea of hodling to your grave, but it is about changing your time preference, and that looking at participating in this asset and to get the benefits of this asset requires a longer time preference than you are typically asked from or typically set up to expect from the rest of the world. This is not a trade in and out and your life has changed. HODL is really about change your time preference. And at the end of the day, change your time preference to unlock the life that you want to live. And I think where HODL gets a little bit perverted or deranged is this, take it to your grave. Michael Saylor famously said, "I'm taking my keys to my grave, and that's my gift back to the network." And that's probably fine if you're already a fiat billionaire to have that mentality. But for all of our customers, for myself, the only bank account that I have is Fold. My exposure to Bitcoin is about as much as you can get from my business to my personal investment. This is where I've chosen to build my life. And again, I've been doing that through bull and bear markets for a long time. And what has been always clear is that, we're here to live the life we want to, and Bitcoin is a tool to unlock that. The only thing it asks is for a longer time preference. And so you need to structure your life in a way that allows for that time preference to come to fruition. Never have a business or a life that is absolutely requires Bitcoin to go up. That is the position you're gonna get wrecked in. But I see Bitcoin as enabling a better life for, my two kids, my wife, my family, my friends, my experience of life. And it is not about hodling to the grave. It's about deeply embracing the idea of a low time preference and building quality things that last in the future that can support that life that you have. And Bitcoin in that world is something that you use. It is something that it unlocks things. It is not a thing that you hold forever. And it is not necessarily a thing you just hold and put more and more leverage on it with loans. I'm a deep believer in actually using Bitcoin as currency in smart ways. And I think there are great uses for some of those other tools. But at the end of the day, Fold, my family, our customers, has lived in, I think, a parallel universe from what a lot of the media talks about today of families, people not starting families because they feel like they're economically unstable, or not accessing home ownership, or not starting that business or taking that chance. A lot of things that I believe are core to the American experience are being essentially thought of as being too expensive, or things that you have to put off into the future. And Bitcoin has unlocked that for thousands of our customers in ways that if they did not have Bitcoin, or they did not have Fold in that way, just would not, they would be living a very different life. And so I am both emboldened by the narrative, the rhetoric, the vision of this, what I'm saying, but this is all backed up by real life-changing stories of our customers, their families, their businesses. And it's one I can echo myself with Fold and my family. And that does require selling Bitcoin here, and it does require buying Bitcoin. I'm ultimately a net buyer. But at the same time, Bitcoin is here to unlock the life you want to live. The end goal is not Bitcoin.
I think that's a great message to end on. Will, thank you so much for your time. If people want to find out more about Fold and the big announcements coming this summer, where should they go?
Always on X at Fold_app. And you can also find me at Will Reeves, and send me questions, whether it's about the product, about the industry. I'm fairly active on there, and love mixing it up with the community. So we're open, and it will be a very fun summer for Fold.
Cheers, man. Looking forward to it. Thank you.
Thanks, Rob.
Thank you so much for making it to the end of this interview. Hopefully that discussion with Will helped you realize that even in a bear market, Bitcoin is fundamentally changing the way that we do business and finances across the world. If you want to dive deeper into how Bitcoin can help you build wealth and the mindset you need to keep it, be sure to check out our interview with real estate billionaire Grant Cardone. It's a really fun conversation, and I think you'll get a lot of wisdom from it. All right, see you in the next one.